Hello, everyone. How's everyone doing? Yes, I posted the wrong. We're starting now, but we really start in an hour. Kidding. Everyone doing okay? Yeah. Okay. So we had a stop hunt here. So far, it looks like it without going for the grand prize stop in yen. So surprised it didn't take this out at 29. I'm not sure what the spike was about happened here with the S&Ps too. Same type of candle right here. Okay. So both yen and S&Ps threatening. Had a little pullback on a turnaround Tuesday in S&Ps, and we've retraced right back there. As you can tell on most time frames, even if we make a new high, and some people are looking for, the 80 handle in there. I was looking mid 70s, so we'll see what happens there. Still euro, trying to grind it out, but I'm gonna wait for this to get long euro. So down in here, 83.58. So maybe another 40 pips. I'll try it down here. Still think something like this is developing and there could be one more wave to the upside. I know I'm talking slow. Here's your channel. So we'll see if this speed line down here holds it. I'll attempt it with stops under the low. It's taken a long time, and this goes against my teachings. It is a confirmed low on the daily. So I'm going to be paying attention to euro pound down here. Probably just go with the euro pound. I mean, let's face it, euro's making new lows, right? So why isn't euro pound making new lows with it? That's a little bit of a market tell. I wouldn't bet the farm on it, but it's kind of a message that euro pound's not making a new low with euro pound having made taken out the same low from here. Is that true? Well, we haven't quite done it here either. Okay. I think this is a pullback that we're getting here in Canada that should most likely be bought. Okay. This was your breakout. Here's your weekly. Not much follow through on this breakout though. Ever have a morning like this, hi Brock, David, where I'm doing this, I'm scanning all different things. Gold still looks kind of weak to me. It was a hedge for my yen, but at the same time, I still am going with this thesis that 10-year yields haven't bottomed yet. And, maybe we're going to get an ABC up here, then the market blows and the yen blows one more time. But we weren't that far away from these lows at 143. Um, I'm still in the camp that we're going to take it out. And the 30-year is looking a little weaker. People are starting to talk about inversions on different time frames. And here's TLT. I still think this breakout is okay. And here, maybe we get an ABC here too. But I think new highs are destiny. But we could pull back here if the S&Ps blow again towards 33.85 or so. But anyway, what I was talking about is I don't see anything that is that compelling to me. So what do I do in a situation like that? The pound, when you look at the pound on the daily, it still looks pretty good. You look at it on the 1 hour, and of course it looks much better than the euro. But, this move up here in cable before we started correcting, it was a confirmed high. So the implications are there's another high coming above this high. And perhaps this is 1, 2, and we get a 3 up here. So, but just all the uncertainty and news, maybe that's why it is a good buy, because it's hard to do it in front of all the flux about Brexit, and you can't get a permit to dump your garbage, and all the things that have to be worked out between Europe and the UK. So a great thing about the team concept is that I don't really have to know what to do all the time because of all of these people, right? So if I don't have any ideas and perhaps I don't have clarity on my screen, all I have to do is start looking at the work of these guys here. Go and see Paulie in the morning, look at his bias sheet. He always has ideas, or at least important areas where markets are going to react, technical spots where you can get rejections and bounces off of. So there's always something to do. But, I just still have to admit I feel a little uncomfortable when I don't know what to do. So it's great being part of a team. Okay, so see, the team knows what to do. I mean, they have some patterns in play that are working: CAD yen, CAD, Aussie, yen, euro. Anyway, plenty of ideas and the reasons why, and then you could always just see what everyone's thinking here. So here's the thinking on CAD yen. I think, yeah, looks like Rega stuff. Okay, so if you're drawing a blank any day, being part of this is going to give you lots of ideas and things to consider. You don't take anyone's trade blindly. You're a discretionary trader, so have it line up with your work. And with that being said, not a real high risk to risk a buck here if you're new, and try us out for 10 days. And that way you get everything. Or you could always go with our light, Forex Analytics Lite. And then, of course, our sponsors will line you up with a broker if you're outside the US, to just through your normal course of doing business and trading, can pay for the reimbursement of the cost of your subscription. And since I don't have anything real compelling to say this morning, I'm glad to turn it over. How to trade gold. You know, for 1550 is the key. Until they take out 1550, I still think there's a chance we blow one more time into the spring. And that's really based upon the bond. I haven't changed my story, Shahab. You've heard it, the narrative. It's all based upon yields, right? So if yields are heading lower, that's still a decent environment for gold. But under 1550, you have to get out of the way. Yeah, I was waiting for one more shot down for XCal. So if I get a little risk off in the next week or so, that'll take it. Looking at 48 bucks is more interesting to me. And if I miss it, you know what? I miss trades every day, and there'll be another bus around the corner. How you doing today, Blake? Yeah. What do you have, about 3 weeks left till you have to get up earlier again?
I guess I'm not even
You don't
paying
want to think
attention.
about that, do
I'm
you?
not even paying attention right
All
now.
right.
But I know
It's
it's
in
coming.
March,
Yeah, it's
early
coming
March.
soon at the end of the month, and
You know how misery loves company.
oh yeah, I know you're gonna laugh
Uh,
all the next 7 months while I have to get up early with you.
I won't laugh. I'll empathize.
It's been, I want to say it's been a fairly quiet market overnight, but actually we had some activity. So the euro dollar has just been very slow going. If you read the blog, the chart of the day yesterday, I think there's a risk that the euro does bounce, but bounces should be fairly limited. I'm not playing the euro, but I am watching it. Um, and the reason why I'm watching it is because I'm long the Aussie. I'm still short some dollar yen, which avoided my stops overnight.
Yeah,
I'm
what was that big candle about?
but I think it was just a stop run.
Okay.
I
All right.
being that
Better.
was just a stop run,
All
but
right.
I figured if we jammed up there, it would if it was going to stall, it would stall ahead of 20. That's why my stops are above that. But I thought if it was going to run, we're gonna make a run for you know um,
1080.
1080 or something.
Yeah.
So it
Thanks,
avoided
bro.
my stops. Now I'm not really too happy with being short the dollar yen, and matter of fact, I'm actually looking to cover because equities are just strong. I
Yeah, I
mean,
thought I had it yesterday.
yeah, I mean, I think we have to go into some sort of acceleration phase in the S&P. I know I've said that for a long time, but it's either that or we just continue to grind higher. So, you know, the coronavirus can't even shake the stock market. So, I would assume that anybody who's short is going to get squeezed, and as we get squeezed in the equity markets, I think it's going to be some sort of acceleration phase. We are at 127% extension of the S&P. The 161% extension of this is the coronavirus scare, if you will, comes up at 3412. So, and actually, if you look at you look at a weekly chart. Let me go ahead and snap that back a little bit. A weekly chart. This also coincides, if I'm not mistaken, because I had deleted it. Um, Oh, we're at the 161% extension of this move lower, and let me go over to this is a weekly. Yeah, this is from the sell off in 2018. So we have I think some well we're already in the overshoot an overshoot situation, but I think the 161% extension right here at 3,400 could very easily be tested, and maybe we can go even further than that. I mean, why can't we accelerate and do a Tesla type of move in the equity markets? And that's what I think is going to happen. Is we're going to see Tesla is a very much like to me a very much of a blow off top type of situation. But why can't the S&Ps do something like this where we're currently somewhere around here, you know, or maybe somewhere around here in the S&P, where we can see that type of move, an acceleration where we get a spike up to 3,800 and then a spike down, and then we end up being right where we're at now. But that shakeout tends to deliver some sort of top. So because I feel that that is probably going to happen at some point, whether it's today or tomorrow or next month or whatever. I don't want to really be short the dollar yen at this moment. I'm short, but I'm going to be looking for the exits uh, at some point today. So I think, depending on what the price action is, obviously today. But a couple of things that I'm following. I have the Aussie, and I am long the Aussie dollar. I love the false breakdown below the lows. I think that we can get a move back to 68.50 or like the 200-day moving average. I think this is quite possible over the next week. Um, that would go along the theory that you know the stock market could you know continue higher. That I think that the hold on really quick. looks like Steve is not going to be able to be here. Looks like Steve's not going to be here today. So if he's not going to be here, I'm going to have to cover for him a little bit. But I'll switch on and off between myself and Stelios, and let Stelios talk, and let's see if we can, if anybody else wants to pop in. Matter of fact, if Paul Franco wanted to come in for a little bit, he might pop in for a little bit as well. But sorry, getting back to the Aussie. So looking at the Aussie, I think that we broke this downtrend line. We had this big move overnight with the RBNZ, and the RBNZ, they they kept rates unchanged, but more importantly, it's the less dovish stance that they took, and I think this specific um action, especially kind of dismissive of the coronavirus, has really led to a reversal in the Kiwi, and this has to have caught a lot of people off guard, because I think a lot of traders were looking for a much bigger sell-off in the Kiwi. Now, I was prepared for the New Zealand dollar strength. Well, I was thinking they weren't going to be as dovish as they were, but they were actually, a lot of people actually viewed him as relatively hawkish. So this Kiwi move is obviously weighing into. Hold on, really quick. Why can't I see? Excuse me, 1 second, guys. Sorry, I was trying to make an adjustment here on the fly, but it's not working. Um, so. So anyway, the Kiwi looks like we're going to squeeze right past the 200-day moving average, and that should weigh positively in what I think the Aussie dollar is doing as well. One of the other charts that you should be paying attention to if you're trading the long Aussie dollar like I am is keep an eye on copper. Copper has, we have a very similar situation to the Aussie dollar, where we made a new, or close to new low, like as a new closing low, right? So now copper, if we can get above like 265, and take out the 200-day moving average, that would be quite bullish for copper, and I think it's going to weigh in on the rally that we're seeing in the Aussie. Now, one of the other things I want to, and then I'm going to go. I want to do a little work on the Canadian dollar. So just give me a second. I got to go back to the euro dollar, because one of the comments that we got in the chat room is, wow, the Aussie still, or excuse me, the euro is still heavy. The euro is heavy, but one of the reasons why it's probably going to stay heavy, and it's any type of recovery is going to be very shallow, is because equities continue to move higher. As long as equities are continuing to move higher, there's no reason for anyone who's short the euro dollar, especially using it as a funding currency. There's no reason why they should cover it. Matter of fact, you're going to probably see more traders piling into euro Aussie shorts that we're back below the 200-day moving average. The euro New Zealand, which obviously fell because of the RBNZ, but you're going to see more traders piling onto this trade on the short side, because as long as stocks continue to grind it out to the upside, and quite possibly blast higher, you're just going to get traders that want to continue to sell euros and use those proceeds as a funding currency to buy other currencies like the Aussie, like the Kiwi. So like I said, any bounce that you see in the euro dollar is probably going to be fairly short-lived. Now, I wanted to do a little work on the dollar Canadian really quick, because the dollar Canadian brushing up against really key resistance. Now, let me remove this line here, and actually, let me remove this line here. I'm going to remove a couple of things. Okay. Now, one of the reasons why I'd been so bullish the dollar Canadian for the last few weeks is that we had this false breakdown, this multi-year trend line. You can see it spawns back from mid 17. We broke it. Everybody got bearish towards the end of last year. It reversed, and we reversed, to test the other multi-year trend line that goes from 2016. We came right into that resistance. Now, it doesn't surprise me that we're holding right now, not at all. But what I do think is going to happen is I do think it's eventually going to break higher. I do think we're going to break above this resistance, but I do think that we're going to get a better price for possible longs. I have no Canadian exposure right now, just so you guys know. I'm not short any Canadian currency. I really want to be, but I just don't want to do it right up against this resistance. So now the question is, where can I be a buyer of the dollar Canadian? Because if I think that this is solid support and I think this is solid resistance, now I can go, okay, well, where's the turning point? Where do we actually turn? And let me make that darker so we can actually see.
Not even a
levels.
bottle of Crown Royal in a purple velvet sack. No Canadian exposure at all, buddy?
No, well, I always have a bottle of Crown in my bar.
All right. Okay.
Yeah. So I
right,
do
you have a little
Canadian exposure, and I guess I have some maple syrup in my
It's my favorite
in my
that
fridge
Crown. Yeah,
because
all right.
my wife
yeah.
only allows me to buy, which really sucks, because I'm a Mrs. Butterworth's fan.
Oh,
Because
but yeah,
hey, when you grow up on the
I
stuff,
know it's comfort food.
it's
Yeah,
comfort food. So I don't mind the corn syrup, and I know it's really bad for you and all this other stuff, but she makes me buy the maple stuff. We go to Costco and buy the vat of syrup, and
yeah.
which stinks.
Well, behind every great man is a greater woman.
That's right. I actually like the taste of corn syrup. What can I say? That's very very bad.
You're
Anyway,
forgiven.
yeah. So I'm looking at this dollar Canadian, and like I said, I'm more interested in actually looking for a place to buy it, but that doesn't mean it can't go down. And matter of fact, I think the better trade right now is with equities as strong as they are, Dale.
Yeah.
Is you can short the dollar Canadian,
Yeah.
or play the Canadian to the long side. Now, what I'm thinking personally is I think that the dollar Canadian can come back down here to the 38% retracement. Now, if you think about this, this is the old trend line, right?
Yeah.
Okay. So the 38% retracement really coincides with that. You think about, like, over the next couple of days, we slice through the 200-day moving average. Everybody gets all bearish. Oh, here comes the dollar Canadian. It's coming back down again. And, it slices through the 200-day moving average. Everybody gets more bearish. Then we hit the 38% retracement, and you use this as an area.
Yeah.
As an area, as a level for longs. At least I could give it an opportunity to be on the long side down there and limit my risk, or rather put in a relatively tight stop if I get triggered for a long. But again, this all coincides with playing the long commodity type of trade. I'm already long Aussie dollars. I don't necessarily feel the desire to be long both Australian and Canadian currencies. So let's imagine that the Aussie continues to rally, and over the next couple of days we make it, above 68 cents. Let's just, I'm gonna, I don't know what I was drawing here. So let's just
I think
say
Grega was looking for that, Blake.
What's that?
Grega was looking for that when he was here the other day in ABC, and then down again in Aussie.
Oh yeah. So you guys know I'm not an Elliott wave guy, and that's why we have Grega here. So let's take a look at his Aussie analysis. So yeah, he was looking for a move, quite possibly. Well, he's talking 67.53, which we're almost there. So if that doesn't turn here and it continues higher, then that would take us past the 50%, which comes in at 68. sense, and maybe even,
Yeah.
he's looking at a full 100% here. But I think more than likely, if we continue to rally in the Aussie dollar, the failure point is going to be up towards 68 to 68.50. But if that's the case, then that means that the dollar Canadian is probably coming down. As you see it right now, it's probably coming down in sympathy or in the in the same vein. So
Also you have a little strength in the energy market right now too.
yeah, I mean, yeah, look at crude oil. I mean, crude looks like it's going to bounce. If you read the analysis on Forex Analytics, so let's find crude. Here's crude, just basic technical analysis. This is the analysis that uh, I write out for you. But the fact that we made lower or higher lows, okay, we take out this $52 level, which we're at 51.04 right now, so we're trading right here. We take out 52, and then we're probably going to make our way back towards the mid 50s. That seems realistic to me. And if crude continues to rally, and remember, going back to this chart, this is also, it would be a false breakdown, right?
Yeah.
It already is kind of developing into a false breakdown. So a false breakdown tends to lead to a reversal. And in this case could maybe lead us back towards the mid 50s. So a move to the mid 50s would put the dollar Canadian probably back down here towards, 132, 131.80. And like I said, I'm more interested in buying the dollar Canadian down at those levels. If I didn't have the Aussie exposure that I have, maybe shorting the dollar Canadian would be the play I would take. But since I've already got Aussie exposure,
Let it come to you.
yeah. So for me, I'd rather just try to play it down here. There's a lot of support down here, so you can see through here. There's a lot of previous resistance. It's going to be some support down here. So I'm more interested in the long side, like I said, down there. Let's really quick, and then I'll bring in Stelios to see if he has any comments here. The U.S. dollar Mexican peso is trading pretty heavy. I played this on the long side last week. I played some of the squeeze, but I'm a little nervous as equities continue to rally. It's like, okay, what's going to stop the U.S. dollar Mexican peso from not making another push down towards, maybe 1840. It is Wednesday, right? Today?
Yeah, buddy.
All right. Well, this is also triple rollover day. No one wants to be long the dollar Mexican peso going into this evening. No one. So, chances are you're going to get this, kind of downward pressure all day long. So today selling rallies seems very logical to me because why why be on the long side when you're just going to get dinged with major rollover charges today. So I would use any rally as an opportunity to be a seller. All right. So anyway, I wanted to bring in Stelios for a few minutes, see how Stel's doing. Stelios, what's going on today?
Good morning. I'm very well, thank you.
Hey, Stel.
Hey, how you guys doing? Okay, actually, I can show a few charts as well, so I can take 10 minutes or so if you want.
Let's do it.
No problem.
I'm here.
Okay. So first of all, let me take the screen. Share. Best of one. And here we go.
Everyone get out their telescope. This is macro.
First of all, data-wise, we had Eurozone industrial production much more negative than expected. Yet another nail in the coffin, I think. It's just a bunch of bad numbers, and it kind of makes sense because the Eurozone was already slowly shifting. I want to say into recession, not yet, but towards that direction. And obviously the coronavirus developments and the kind of slowdown and complete grind to a halt of global economy due to China is gonna take effects for sure. Even though the equity markets don't believe so. It's actually funny because oil has sold off over $10 on this coronavirus, and it makes sense because there's demand is dropping. It's going to be a negative effect for sure, but stocks don't actually care. So let me start with the dollar. Actually, let's have a look at this chart first. So US dollar.
Stelios,
Yes.
I know you're speaking. Just do me a favor.
Yep.
Give me 10 minutes. I've just got to do a couple things
Yeah.
for my family, and I'll be right back.
Yeah, I'm here. I'll take 10 minutes. No worries.
Thank
no
you.
worries.
I'm here.
Hey, good. The two of us. Just the two of us.
So sad, buddy.
I'm not a good singer. Okay. So the dollar. If we look at the dollar, this is not the DXY. DXY, remember, is 50% euro. So that's heavily skewed towards the euro. The US dollar index is much more neutral it's actually a much better balance across one number of currencies. And DXY is 50% euro because it used to be Deutschmark, franc, lira, whatever, and they all got lumped into euro. So if you look at the US dollar, we look at this point here, which is end of 18. Where is it? Somewhere around this peak here. US dollar index was around 12,300. That's when the Fed did this 180-degree turn. They turned very dovish. The market went from pricing 4 hikes, I think it was in 2019, to none, and then they actually delivered 3 cuts. So that theoretically is a big negative for the dollar. Whenever monetary policy shifts from hawkish to dovish and rates go lower, theoretically the currency will depreciate. What has the US dollar done? It's actually done nothing. Actually, no, it's 80 points higher. So the dollar has been lagging or has been stronger than expected over the past year and a half, probably due to the performance of the US economy. And the US economy has been a bit hit and miss. Some numbers have been very good, like employment has been good. But show me a country which doesn't have good unemployment figures. UK is almost all-time lows in unemployment. Even the eurozone is now slowly dropping. The eurozone with countries like Greece, where youth unemployment is 50%. So employment has been strong in the US. Inflation has not been doing that well. A core PCE, which is the Fed's favorite metric, touched 2%, which is their target, a year and a half ago, or whatever it was, and then it's come back down to 1.6% or 1.5%, and it stays there. It's not doing anything. So inflation is not at target. Employment, we said, is good. GDP is good, but it's slowly dropping. We're not going to be anywhere near 3% yearly growth that Trump is touting. And leading indicators have been dropping in the US. So the economy has been, it's not strong, but it's not weak either. It's kind of been hit and miss. But the dollar has been very resilient over the past year and a bit. So now if we go back to dollar yen, which is one of my favorites, we've been trading within this wedge for what is it, 3 years now, almost 4. And there's going to be a decision at some point because this is tightening and tightening. My view is that the dollar again is going to break lower, and I think that will probably coincide with a risk of move. The equities and assets in general, they've been trading very well over the past years, and I personally think they're running on fumes now. I mean, this, like they say, just follow the price action and don't get in the way of the Fed. But eventually you can't get away from fundamentals, and valuations are stretched. We have all these dangers in the world that the markets are just casually ignoring, and just doesn't make any sense. I've been wanting to short equity markets for a couple of years now. I haven't done it, thank God. But I think there will be a trigger. I used to think that the trigger would have been higher rates, just like in 2018, the little, was it 20% move we saw lower in equities. But higher yields, I think we're now very far away from that. I don't see how yields are going to get higher. So there's going to be some other trigger. Will it be this virus, getting bigger and bigger? Are they telling us the truth? Are they not? I don't know. But theoretically, the effect of the slowdown in China and this basically China is grinding to a halt should be felt in corporate America. In companies, imports are going to become more expensive because they can't import stuff from China anymore, or they can't for a while. So I think we're going to feel that at some point. So I think dollar yen is really, really coiling here. And I think Blake has been saying about the 110 level for a long time. I think 110 is a really good risk reward short. You short that, you take 40 pips of a stop or something like that, and if you get it right, you're going to be going all the way to 106 or something like that. That's it's my humble opinion. So I like this. I like this a lot. Also, cable has been trading pretty erratically over the past couple of years. It makes sense because of all the developments in Brexit. Now we have some kind of we're moving forward in Brexit in terms of UK is now out of the European Union, but we don't know the details of the associated trade agreements, if any. So cable, I think, and I've said this in the chat room for the past few days, as long as we stay below this trend line, I think cable is going to be trading bearish. But my long-term view, my medium-term view, say 5 years from now for sterling is positive. I think eventually there's going to be some kind of trade agreement. I don't know what's going to entail, but I find the possibility of a no deal, of basically a clean break, I find it to be a low probability event, simply because both sides have vested interest in this. Okay, granted, the EU want to show, to make the UK an example and show that, look, if you leave the European Union, then you're on your own and you're going to find all sorts of obstacles. But I think in the end, logic will prevail, simply because it's just too much money involved, too much. The UK and the EU. The EU is the UK's number one trading partner, and vice versa. It's a big. It's a big relationship that they have. So I think the pound will, in the medium term, go higher. In the short term, we could very easily go back towards the low 120s if we see, it's all about headlines. It's all about progress made or not being made. So if it's quite probable we might go lower, but I will be looking for this break, and I predict it's going to be somewhere around, in the summer. And I think that area around 131, 132, I think that's where it's going to happen. And if that happens, that is when I'm going to get a long cable.
What kind of magnitude move out of that triangle, Stel?
Oh, I think a move out of this triangle will mean a positive scenario, a positive outcome. So I think 140 will be these highs here. What is it, 142? I think this is going to be the first target. I think it could go much higher than that, but I think a first realistic target is from 131, 132 to 141, 142. So it's a big, it's a big way. It's a long way to go, but I think we've seen how cable trades. It can be absolutely mental. So that's my view on.
Great to see some weekly views.
Yeah.
What else you got?
Every now and then, oil is another one I've been looking at, and I've been talking in the chat room about it. And this is one that I wanted to get long. I actually missed it by just a little bit. I wanted oil to get to this trend line, which was about 49 or something like that. It got to 49.40. I think I had my bids there. They didn't get filled. I think this is it's a really good level. We've had these lows 3-4 times here, and a false breakdown of this little area here would be perfect. You've seen this a million times. It tries, it breaks, apparently breaks, and then it comes right back up. And I think if we do break above,
is that the 52 number? Back above it, 52.
Yes,
okay,
52.
all right.
And I think OPEC is in the picture. They're talking. They're not doing anything, but we know how they react. They can be quite decisive when needed. So will they limit production more? I think it's very possible. If
the Clampists are cutting back on their production.
Yeah.
You know who Jed and Jethro? The Clampets.
Yeah, that was what movie was that? That was
Beverly Hillbillies.
Beverly Hillbillies. Yeah, that was funny
Yeah,
actually.
yeah, they're cutting back on their production.
So yeah, I mean, I think that's another good risk reward trade, and because either this situation will persist, or it's going to be a non-event. So, or otherwise, within a month or two, everything's going to be well on their way of being back to normal. You can't have it both ways. So either equities are going to start rolling over, or if things get better, then oil has to bounce. So that's another thing. And obviously, talking about oil, we can't not talk about Norway. And Euro Norway's one is a short I have on. I'm actually out of the money now a little bit, but it's been a very frustrating trade. At least you get 1% carry, which is nice. But you have this double top up here. You have RSI divergence. So I like this. I want to see how it's going to behave going under this zone here, or if it's going to break or not. But here, there's a big area that if breached, I think there's just clean air below, and that could coincide with a rally in oil. And it's something that I'm definitely looking at, and I have been looking at for a while. We had the Riksbank today. Speaking about Norway, we had the Riksbank, which met today. They kept rates unchanged at 0%. Remember, last time they hiked from minus 0.1, I think. They went to 0, and effectively telling the world that negative rates don't work, which I agree. Riksbank today, they were not dovish. So the Swedish krona rallied a little bit, and the Norwegian krona rallied as well in sympathy. They kind of tend to go hand in hand, those two. So that's another one I look at. What else?
Paulie is in the house.
Paul is in the house.
Yeah.
Okay. I mean, if
letting you know.
Okay. Well, let me talk about gold as well, and then maybe if he wants to take 5 or 10 minutes, and then I'll probably take us to the end of the hour. So gold has been a tricky one. I remember the big breakout point was this here, 1360-ish. We all talked about it. It was, if you look at the chart over 3 years back, is once, twice, 3 times a lady. 3 times it tried to break, didn't. And when the break happened, we were for people who listened to our webinar, we were all quite firm in being bullish gold here. And I actually thought we might get a pullback towards the breakout point, especially at this point here. I thought we might get a pullback down, which would have been a gift to get long again. We didn't get that, but we seem to be on a kind of upsloping channel. I think there is a possibility that gold might drop a little bit towards the bottom end of this channel. If it does, I'm going to be buying it. I am not long gold. I am long silver still, and plan to keep that for sure. But gold, given the global developments, given that nobody's hiking anywhere, rates are going to stay low. The global economy is sluggish, to say the least. Deficits every year, US, UK, Japan, everybody creating deficits. I don't see how in a medium-term horizon gold can go lower, unless they mine an asteroid or something.
Haven't you been surprised how strong gold has been in the face of the equity markets? I mean, to me, it's quite staggering, and it's telling that at some point gold is going to rip people's heads off, in my opinion.
Yes, I think the markets are telling us something's wrong. The equity markets are rallying. Gold is very resilient when it should be going lower, and dollar yen cannot rally. So one of these things is wrong, and I personally think it's equities, but obviously you can't get ahead.
And bonds, I know they're down today, but bonds are strong too. I mean, and you're right. There was there is a lot of speculation that the coronavirus numbers that we get are not correct, and China's underreporting, which, I mean, it looks pretty suspicious given the fact that we have just a consistent slow grind higher, or now it's starting to peak. It seems very managed to me, but I think if we start getting some indications from different countries, if it made its way out of or across China's borders and maybe start to worsen a little bit in other places, then I think it's, it'll be very worrisome.
Larry
Yeah.
Williams used to say that when gold and the market are going up together, that it's not healthy. Gold is like is saying when it's going up with the market that it's got a temperature or a fever. It's not a healthy advance with gold advancing with it.
That makes a lot of sense. Hey, Stelios, I want to thank you for stepping in for so long. My wife has been for those of you that do not know, she's been battling the flu for the last week and a half, and so I've had to take on a lot of Mr. Mom duties. And I shouldn't say Mr. Mom because I
Yeah,
just I
you
mean,
have boys. You
but-
don't go to the door with a chainsaw when a girl comes to see Roman or
Well,
Christian, do you?
the fact of the matter is I've taken on a lot of duties that I just usually don't have when we're trying to get the kids out of the house. So and it's just one of the benefits of working from home. But although if I wasn't working from home and I was actually driving to an office like my colleagues in Connecticut, I would probably be staying home and doing what I'm doing here. So, but the thing is, I had to tend to some of those duties really quick. But Paul Franco is going to join us for a few minutes, probably the last 15 minutes here, and I want to tell you guys a little bit something about Paul. So, for those of you that do not know who Paul is, first of all, Paulie, or SPZ Trader, I've known him from Twitter for probably about a decade. About, I don't know, 5 years ago, 6 years ago, I brought him on the Wise Trade team before we were purchased by Ally Financial. And he actually continued on with them for a little longer after I broke off and started Forex Analytics. But the reason why I brought Paul Franco along back then is because I knew he traded for a living, and the guy's he's a survivor, he's a fighter, he's a scalper, and he's a damn good trader. And so I knew, and at Ally Financial, we paid him, a contractor's fee, which isn't very much. So I knew he'd always made his money in the markets. And even with Forex Analytics, it's not like we pay him just a little bit. So I know he's making his money in the markets. He's the kind of guy you want to listen to because he understands the levels, where the market's inflection points are. He knows how to play them, and that's why I love having him on the team. Anyway, he does the European crossover session for the Forex Analytics clients. You can listen to his webinars after the fact, but if you're part of the Forex Analytics community and you're in Europe, or you can listen to the European crossover, make sure you do so, because Paul Franco is, and he also provides a lot, if not most, of the Asian analysis every night for a lot of the majors. So, Paul, we're going to bring him on so he can maybe wrap us up and show us what he's looking at going into the North American session. Paul, you around?
Yes, I am. Can you hear me?
Hey, Paulie.
Yeah, I'm here. Yeah,
Hey, thanks for stepping in. I know Steve had to go tend to sometime life hits you, and hits you at the most unexpected moments. And it was a very unexpected, hey guys, I have to step away. And Paulie, said, hey, I can be here. So, so you guys are all in for a treat before Dale goes on to his interview. So, Paulie, what you looking at today?
Actually, Stelios was talking about the crude, and actually that's what I was looking at right now is the crude. I mean, we did with the.
I'm allowing you to grab the chart so you can show everybody what you're talking about.
You're allowing me. That sounds very patronizing.
Actually, and we had done the European crossover, and Blake mentions what we do. And just for those that don't know, is we do go in and cover, we're going to move this out of the way and move the crude out just rather quickly. So we go in and cover all the majors here, and then we step into the cross rates here, where it's going to be the New Zealand yen, Euro Aussie, the guppy, the sterling odd. So we go in and hit those, and we start out with a little bit of news for the day, and then we go on and take a look at the economic reports. So we kind of set ourselves up because the European crossover webinar is more geared towards scalping or short-term trading. So we'll go on and have like yesterday, we had our head, at least for me, my head and shoulders target yesterday was for 919 on the euro. Amanda had 898. And so we had our support yesterday at 897. We had a level there on the daily. The low was 892. And then our resistance, I think, was like 934, something like the high was 925, I think. So it's more geared towards, my point is, it's geared towards very, very short-term trading. Although, like I said, not everybody in the chat room, everybody has their own style. A lot of great traders in the chat room, but lots of times what they'll do is they'll incorporate the use of the bias chart for the day, incorporate those with their own levels of what they're looking into for entries or exits. So that's the take on that. But I want to go and touch on the crude oil, which I do follow quite a bit, and I do scalp a lot on the crude oil. And Stelios had mentioned the crude oil, and we'll kind of open this up a little bit here. And he had mentioned, when I went and got sub 50, and I've just taken a look here. And this is going to be here on the daily chart. And we're coming up, you can see here, this 51.21 I had marked off. We actually just made it up there, and we paired back a bit. And you'll see where that 51.21 came in. Let me go and pull this up. Bear with me. That's actually the 61%, the 51.14. So we made a run up here to this 51.21, and we paired back. But Stelios made a good take on that, is that when it kept dipping below $50, we kept holding and holding. It was just like Blake's take about the beach ball. You can't hold it underwater. And I'm looking for potentially for this market to go on and as he's saying, start to turn around. If you look at it on a weekly basis, the key is going to be, if once we can get above 52.62, we'll have a definitive bottom in place, or at least I believe we'll have a definitive bottom in place. Today, as we start to make a run up here, you can see here the key level is going to be this 51.27 right here. We actually have some volume sitting in here, and I'll go in and show you one of the tools that I also go in and use.
I noticed a lot of your levels, Paulie, incorporate passing through wicks, trying to attack where the bodies are at of those candles.
Yeah, exactly. You're correct on that. And I'll tell you what, one of the things, and it's an excellent point that you bring up, and you're right. I do that, and you'll see where the market lots of times will go in and hold a level there. We saw that essentially yesterday, even with the euro. I'll give you an example. If we kind of stick around towards FX, so let's go on and just pull up the euro real quickly on the daily, and I'll give you an example, whether it's on the daily, whether it's on a, bear with me. So a lot of times where I come up with these levels, as you can see here, as Blake says, the wicks, either the opens or the close, and I'll find those, resistance, it's going to be key, whether the market can get back above there. Yesterday, we had our bias chart support at 897. The low for the day was 892. But like I said, my thoughts were with the euro, and it's just barely hanging on, was we'd had 6 straight days down here on the euro. And so I thought with the head and shoulders target, probably a lot of shorts would come off. And the analysis I had coming into the week, jumping all over the place, was I thought we'd run the bulls. I put on there, ran the bulls out of Dodge. So I didn't think that there was any bulls sticking around that were going to have to be, they were still trying to defend this market. So once we got into that head and shoulders target area, and I think Blake has lower, but I had 919, Amanda had 898. So Mox Nicks right there in the same place. But our support was here. And the reason I put it through the wicks, and I think it's important, or is very helpful, especially with FX. As you know, with futures, you can look at volume. A lot of people look at volume analysis. You don't really have that in the FX cash market. But my take is, when you look at these bodies, which is where I like to put in the close. I'll give you an example. Look at 1170. You can see here the close here, and you can see how the market's trying to pop its head above this 1170. Can't do it. It gets above there, but it doesn't close. It doesn't fill the bill. Same thing here. The last run up, basically the last hurrah on the right shoulder, can't close above, can't seal the deal above 1170. And to me, when you look at those bodies, that tells you, and I've said this before on a couple of webinars, to me, that's basically your put up or shut up time, because that's going to be essentially your close. So whether you're looking at a 30-minute, you're looking at an hourly or a daily, this is where folks have to say, okay, well, you know, I'm long here or I'm short. If it closes above those body, I got to get out. You've heard them say, you know what, I got to get out if it takes us the previous day's close or that week's close. And so that's why I put them through here. And I think that there's a lot of volume there. So with FX, we don't have volume analysis. We can't really say, okay, there's this much volume. I mean, you can look at the futures contracts like the 6E or 6B, depending on what you're trading. But once again, for real volume, we don't really have that. So it's one of the reasons why I like to put my support here and resistance. I always even want to do the diagonal trend lines. Same thing, I'll do them through the body. And you can see here, we rallied up here, we came up a little bit short. And look at this key level that held in place. That's at 10, right there, 1052. And you can see here, once again, the bodies here coming across, a couple of stabs. We still can't take it out. And we come up here to go and fail. And that's also this trend line. And then we roll over for 6 straight days. So just to touch base on that, what Blake was referring to, that's the reason I go on and do that. But
that makes a lot of sense.
But getting back to the crude oil, yeah, I think we're at a key area here. If you're coming into this morning, though, I think we came up here to this 51.14. We actually made a run up here, and then we saw the market going and pair back. I think the key level is right now, it's just going to be this 51.27. And I'll even give you an example. One of the tools I'll use when I'm trading that or for scalping it, I was actually scalping a little bit in Asia. You can see here, look how it coincides here. So let me move this out of the way. So here's the 51.14. Here's that 51.27. You can see these touches. So you're thinking, okay, well, he's just running them across the body. Well, look at the amount of volume that's sitting right there at 51.20. Got 179 contracts right there sitting, and actually had a little even more. They're building it up a little bit. But you can see here, as we made that run up here to 51.14, which, let's show you right here. You see here the 61%. We came up here, had a pretty good little volume. The thickness of this suggests how much volume is being traded. And then we saw the market go and dip back here to 51. Doesn't sound like a whole lot, but we'd already run up quite a bit. You can see here, look, since the Asian session, this thing had just been on a tear. So once we ended up to 51.14, the market paired back. It looks like we're going to trade one more stab up here. Here's 51.20. And at 51.27, we're talking about at 51.32, actually, you have 125 contracts. So I'm thinking we may just jump up in here, take out those highs, and then even if we don't, eventually I think we'll go higher. But I think this is going to be a good area for a resting point. And the volume is telling you here, you got 100 contracts here, almost 200 at 51.20, which takes out the highs by just about 2 cents. And then right at that 51.27, just a little bit above that, 125 contracts. So the thing is my point is that I think this level, you can see it where it's touching across. You see here, and the way I look at it, just to briefly touch on this here, is when we come down to this 51.27, you can see there's a battle zone. They're really fighting here, back and forth, back and forth. Eventually, the bears win out, so we break low. Where do we come back? We visit 51.27 again. We fall back. We get above it and like, okay, finally, we've cleared the mountain. And we turn, the guy falls down and slides right back down the mountain. And then look, we've got another good battlefield right at 51.27. So when you move, or if you want to call it extrapolate out to where we are right now, 51.27 makes a lot of sense, where the market may go on and run out of gas. You look on here, what do we have? 51.20, 200 contracts. So here, 51.30. They are starting to take away some of the volume here, so we'll see what happens. But it makes a logical area where the market may want to take a pause here at that point and come back. But certainly the trend's going this way, and I've learned the hard way. You definitely don't want to stay in the weight of crude. And Stelios, that's correct. I remember him saying about almost 2 weeks ago or so, saying, boy, I'm going to be buying under $50. I'm going to be buying under $50. And I was wondering if somewhere he hadn't already gotten filled in here. but you can see here the market has been, continue to push higher. And some of these moves down here, I think it was like a few days ago, I would only play from the long side, and even if it was only scalps, because I kept thinking I don't want to get run out of, I don't want to get run over. We still kept moving, dip a little bit here. But now it looks like we're trying to move a little bit higher. I know Russia's still saying that they're thinking about, but they really don't want to cut. But like I said, it'll only take a little bit of news, and this thing will probably move a little bit higher there.
Well, Paulie, I want to thank you for stepping in today, because Coach has he has an interview that he has to get
Actually,
to.
there was a family emergency, so I don't. But I
oh,
tell you
okay.
what, Paulie, I have a great name for our new company called Bachelors FX, and the tagline is "Only the body counts."
There you go.
What do you
right.
think, man?
That's great. Hey guys, I have to step out, but
All right,
Paul,
Blake.
thanks for stepping in today.
Yeah,
Coach,
thank you, Paulie.
thank you. And thanks
Stell.
everybody for being here.
Thanks,
I'll let you
Paulie.
wrap it up.
Thanks,
Okay,
guys.
sure.
Stelios.
Great look, Stell. All right, everyone. I have Peter Goodburn tomorrow. So see everyone in members chat. I've been dropping in there. Say hello to everyone. So have a great day trading. Remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow or in members chat. Okay. Oh, you're very welcome, Brock, Monica, Shahab, my trading warrior brothers and sisters. See you tomorrow. Adios.